Welcome back to ETF reversals. Today I'll be looking at SPY. I'm going to be showing you guys how I do my TA on SPY's chart. I'm going to be setting some, yearly, quarterly, monthly levels. I'll be setting my 2-day and 4-day ranges, as well as some supply and demand zones. If I see any gaps, I'll make note of those as well. So let's get into it. All right, so using Thinkorswim, this is my favorite platform to use. We have a blank chart, so I'll just get right into it. I'll show you guys how I lay my chart out and, how I'm able to identify my levels and get into position with SPY. And so, boom. We like to get the previous yearly low and yearly high, so we get those priced in. Because one thing about price is that it has memory. It always goes back to what it's most familiar with. So this is one thing about Thinkorswim. You have to update these lines when you go to different time frames. So we can see this is the quarter. Yeah, see. Now with just the monthly chart, we can see that we had these levels set at the beginning of the month, which would be January, I think it was 2nd or 3rd that the year started, or the first trading day started. If we had these levels set, we would have known that with respect to the 50% rule that Sarah, what is it? Trade Sniper Sarah has at 463.96, we would have been getting ready for a bearish month. We would have been looking for that monthly target here, and then also looking for that quarterly target. So just, a couple things to think about as you prepare. You can see today is the 28th. Well, it's late night, but this is how you can get ready for the next month. So now we go down to the week. Now these lines really bug me. It's like I'm gonna be connected. Okay. So we're at 426 now, so we're not going to go super low in terms of memory. We're just going to stay above, within this year's quadrant. You can see something's happening around here. Yeah. Well, we're going to skip to the 4-day. So what's happening on the 4-day? So one of the things I like to look at is this idea of a zigzag, like 1, 2, 3, 4 breakout. And so that's what I'm looking for when I'm marking my zones. And so you can see we have a slight one here. It's 1, 2, 3, 4 breakout. And so we'll mark the high here. We already have the low there. And then we'll just put top for the range. I like to mark the range as yellow. So that. And then just so happens the quarter is also a part of that. So And I like really clean charts, so all of my zones end on the same day. This helps me stay organized. You have organized charts, you have organized thought. When your charts are chaotic, you have chaotic thought. Just a note from my book. Okay, that's one. Then you can see we have a bit of a supply zone. Now, I know people do this different ways. I like to just get the top of the candle where the trend started. But, you know, this is all subjective. Then you can see, oh, this is interesting. 1, 2, 3, 4, then a breakout. So I'm actually, it's a lot of wicks there, so I'm not going to get that one. And we're going to go to here because outside of this space is more wicks. See, it's real wicky. And so let's do this. And we're just going to push this out to the end of the quarter. And I want to say you'd be surprised how much these tickers revisit their ranges, but you shouldn't be. And then see here, look, this is a 4-day chart. So up, down, breakout. And then look how this breaks out of the supply zone, breaks into the range, stops, and now is trending inside the range. So that's why these zones are important. Okay. See, this is a bit low. I don't really care about this one much. Let's see, 1, 2, 3, 4, breakout. Yeah, this is probably a lot cleaner on the 2-day chart. And yeah, we're gonna, not sure what this is, but price definitely stopped here. So minimally, we're just going to do a supply zone. That looks pretty good. All right, let's go down to the 2D level. Let's just see what we see. See that price action? Yep. And then also, let's mark this. We want to say bottom of that 2D supply zone. So we want to know when we're entering that zone. And then this is still respecting that range, so just keep trucking, breakthrough. Yeah, so this is pretty solid. So let's go down to the daily and see if we see any gaps or anything. Dun, dun, dun. Okay, we have a gap here. Filled. Okay. Something to note, whenever you have a gap, see we have a gap between this candle and this candle, there's only a wick that's in between here. So we know we're going to revisit that level. So we need to see a body to know that we really have revisited that level. So we come down another wick, and then we come, and then you can see, boom, the body. Another note, so you can see here, it was gappy here, there was a gap here, there's a big gap here, slight gap. I mean, it was filled, but then it made another gap. So we knew that we were going to be in this range. Another gap, another gap. So yeah, 4 hour. Okay, so here's a gap here. Now we already filled it, but it's still important to note, just so I'm doing a full technical analysis of this chart so you guys can see how I set up. The reason why we document these price levels is because we want to know exactly when we're going to enter that gap. We want to know the number. Okay. More gaps. Nope. All right, let's go down to the 2 hour. Where's my 2 hour? That's weird. Okay, we have a gap here. So let's get our rectangle drawn. And then like I was saying before, we like the price levels because we want to know the top of the gap, the number, so we can be aware of that number, and then the bottom as well. Now we also want to go on this side and see if we missed anything. All right, and we can see another gap. You see it lines up perfectly. Boom. Another gap perfectly inside that one. So instead of drawing another rectangle, we're just going to drop a price level. So this is the bottom. And then there's another gap here. Sheesh, when did this happen? Looks like this was in October. Then this is another gap. This is different, so we're going to go ahead and mark these two. It's starting to get a bit crowded over there, but these levels are important. And we didn't mark this one because it lines up so closely with that 437 level. And so when we look at this, pretty informative. Pretty informative. We'll go down to the 1 hour level to see if we have anything left that might be important. I think we've gotten everything though. See that gap up there, and then boom, cleaned it up. Gap there. And so when you're looking at a new high, you want to see like what the highest point is, and then you want to just start setting levels to watch and wait for this baby to fall out of the zone. And so we can see when we broke 478, actually this was, I think this is the day they delivered the December meetings, the December meeting minutes for the Fed when the year started. All of that price action. So yeah, you have a couple of different levels to set. Like here would have been a good level to set. We gapped up, and then boom, as soon as we got here, strong move down. It's just SPY is just a great chart to watch, to master. And so we can see, looking at the hourly chart, that we have a nice understanding of like what's going on right now currently. And so we go to the 30-minute chart. Look at that zone here that's formed. And then as soon as it pops, it shoots up. That was on the 25th. Gaps up. And then immediately on the 26th, it fills that gap back down. Gaps up, trending, and then strong move back to the downside. Trending, move down, and then breaks through that trending point. Trending, and then breaks up. So you can learn a lot from just having a nice clean chart and understanding where the ranges are, where the gaps are, supply zones, and then also like look, the monthly, the quarterly, and yearly levels. I think the year is like right down here. Yep. And so things get really interesting when you get to the 15-minute. Yep. So now you have a better story of understanding what exactly is happening with the chart. So that's all for today. Thanks guys for checking this out. I hope you've learned something valuable. Hope I've been able to deliver. Like the video, share it, leave a comment. Follow me on Twitter at ETF Reversals. Peace.